Very strong numbers, I must say, and well, I've talked a lot to market watchers, talking about how we're hoping that half-year numbers will help boost the equities markets and bring back much-needed confidence. So obviously, this will be one way to go. So we're hoping that we'll see other numbers perhaps similar to this. 163% rise in PAT, that's very strong. But let's start by you talking us through the key drivers of your earnings and how the different businesses, especially power, contributed to the bottom line. Okay,
thank you, Esther. The 58% growth in our earnings were basically driven by one, power. Year-on-year growth in earnings for power was 65%. For hospitality business, it was 29% year-on-year growth in earnings. This is driven by the enabling environment from the economic recovery and all that, and also a lot of initiatives in the power sector, which has improved gas supply, also improved our power generation, which has been sustained quarter by quarter up till this quarter. And those have helped us with our earnings in the power business. For hospitality, of course, you know, we've been doing an upgrade, released a lot of rooms, so it has improved occupancy for both our Abuja Hilton, and then we have sustained profitability growth in our Transcorp Calabar business. So these all added up to the growth in earnings for both businesses.
Is this something you think can be sustained, especially because this year, I say that because we had that growth in the last quarter of last year, growth of just over 2%, and then the first Q1 growth came down to somewhere around 1.9%. And I've talked to a lot of CEOs, and they've expressed concerns about the operating environment and the economic momentum that appears to have slowed down. So as a business leader, what are your thoughts in terms of how you can sustain this kind of bottom line and even top line, given the current environment?
Well, for us, you know, in the hospitality business, what drives this is momentum in activities in the economy and also what happens in the social environment. You're well aware we have a pre-election. There will be pre-election activities between now till the end of the year and first quarter of next year. That would drive momentum of activities for us in the hospitality business. So it provides a sustainable window for us in that business space. Initiatives in the power sector will also help us sustain what we're doing in terms of power generation and things like that. So I believe that what we have now will be sustained or possibly even surpassed.
For the power, I mean, a lot is going on, has happened, or it continues to happen in the power sector. I mean, I also have talked a lot to analysts about what's going on in the power sector, the privatization and how discos, I mean, the BP just came out a few days ago to say the discos were technically insolvent, and I'm wondering to myself, what is happening in the power sector? Who are those that are making money, and how are investors looking at that power sector, right now?
Well, for us, we're Gencos, we're not discos. There are a lot of people in the value chain, discos, the transmission company, the Gencos, and the regulatory authorities, MBET and NEC. So for us, we don't have much of a problem, well, especially as it comes to insolvency.
You don't have any challenges, no gas
Well,
constraints?
you know, I've mentioned there's improved gas supply,
okay,
basically because of the PAP window, which has eased payment to the gas suppliers. So in that space, things are relatively better than it was last year. So challenges we have has to do with legacy debts, robust liquidity relative to what we should get, and a couple of things, but not as bad as it was last year. For the discos, I don't know what is happening to them, but I know that part of what is happening is capitalization and the fact that they're not able to ensure we have a robust metering system that can enable us have the liquidity that we expect to be injected into the system, and also the fact that they're not able to remit as much as they should based on what the agreements we have with them.
I thought that, I mean, looking at the value chain, it's all linked.
Yes,
I mean,
it should be.
The Gencos, the discos, the regulator, and if one part is ailing, I'm thinking to myself, shouldn't that be some kind of impact on the rest? Well, on the value chain?
Yeah, in anticipation of maybe that ailing, whatever may ail in the value chain, you know, we have some initiatives that have come up from the Power Ministry. You have the eligible customer window, which provides some kind of window for stranded capacity. So even if the discos are not willing to take up what we provide as Gencos, we have a window that can take that up. So we'll deal with that challenge when it comes up.
Okay, so for, I mean, specific guidance now, do you think that you can surpass this half-year numbers going forward?
Absolutely.
Oh, really? Okay.
Yeah.
Well, let's talk about the recent changes at the board. We saw new appointments of some EDs. Tell us about that.
Well, we have two appointments as executive directors. basically all in the hope of trying to excel in corporate governance. And also they bring a wealth of experience to the board based on their history and based on their qualifications. The whole idea is to ensure that we continue to excel in corporate governance, continue to excel in what they bring on board in terms of experience, especially in the area of customer service, operational efficiency. One of them actually is going to have a directorate where he will commercialize a lot of initiatives in the power sector and also drive our oil and gas exploration window to ensure that we drill. So those are things that we know will be a lot of value additions to our rev lines later quarter of this year and early quarter of next year.
I'm glad you mentioned oil and gas. What are your thoughts on that sector right now? We've seen a couple of reforms, the PIGB, well, not in the bag yet, as it were, but I mean, we're hopeful the lawmakers are trying to do their best to ensure that all of those bills are all passed into law. I know that also some players, I mean, are also receiving support from the government. But what are your thoughts in terms of how we are attracting investments into the space and how investors themselves are interpreting things that are going on in the space? I
think the government is trying, especially with what they're doing in terms of management appointments in the NNPC, and also what the minister is doing in that space. They've been quite propulsive and coming up with initiatives to help build that sector. So in terms of regulatory approvals and things like that, is a lot easier. And my hope is that with the growth, with the increase in oil earnings and things like that, and the fact that they are easing a lot of challenges that used to be in that sector in terms of approvals, investors will look positively in that area.
Okay, I want to quickly bring this to your attention. Looking at your finance costs, so one of your line items, it did go up slightly from the same period of last year. Could you tell us more about that?
Well, the upgrade, of course, it's an issue.
Okay.
We also have maintenance of our turbines in the power sector business. These are all things that draw a lot of cash flow, and that explains part of that.
Okay, so it's not like